This year's extreme weather in Queensland has blown the Australian economy way off course. Today's March quarter national accounts showed an economy going backwards at the fastest rate since the last recession in the early 90s, as most of Queensland coal mines lay underwater. But there was a silver lining, and that's what most experts chose to focus on. Here's Philip Lasker.
Minus 1.2.
Today's national accounts showing a sharp contraction in the economy brought back some very unpleasant memories.
The first thing to say is that the accounts do show that Australia is in a recession. The most important thing about that is that this is a recession that Australia had to have.
More than 20 years later, the quarterly slump is almost as big as the one that brought that declaration from then Treasurer Paul Keating. At 1%, annual growth is as weak as it was at the height of the global financial crisis. But nobody's talking recession.
Normally a negative GDP number would scare markets, and at a 1.2% contraction it was certainly very large, but that was entirely driven by the impact of net exports from the January floods in Queensland.
So the expectations are that exports will bounce back along with the overall economic growth rate.
We get some reconstruction occurring from the Queensland floods and we get continued business investment. The odds are we will be back at above trend growth in the second half of this year.
So it's still the case that there's very strong demand for our coal, and in fact as a consequence of that strong demand we've seen coal contract prices rise in the June quarter since then.
Exports collapsed almost 9% in the quarter, but on the other hand business investment rose an encouraging 3.6%. The increase in housing construction was well above 4%, and consumer spending was up 0.6%, not as weak as expected.